Why did Netflix and Tesla command the market while most stocks continued their underlying descent into the gates of hell? Why were banks and financial services earnings good even while their leaders were fearful that we were going into a severe recession? Why is United Airlines taking to the skies with some profits now? What signs are the stock market and the Federal Reserve giving that indicate that the trajectory of most stocks is probably downward and off over a cliff? Hang on for dear life, it's going to be a good one. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, on Tuesday, the stock market was focused on Netflix because it's taken as the prime example of how the streaming services like Amazon and Disney are likely to do. Wall Street thought they would do better than the two previous quarters, in each of the two previous quarters, Netflix had actually lost subscribers. So when Netflix came out with a positive reading on subscribers for the third quarter, it was a big surprise. They came out with 2.4 million new subscribers when Wall Street was only expecting 1 million new subscribers. They have about 223 paying customers, and that represents a 4% increase year on year. So their base is growing again, which was very good to see. Netflix's revenue and earnings were both up, which gave the stock markets some much needed hope. Bank of America, JP Morgan, and Wells Fargo all reported good earnings, as did Charles Schwab, which was based partially on the interest earned. Banks collect a lot of money, of course, and financial services as well, and they find different ways to invest that where they gain interest way beyond whatever they pay you. So that difference increased, and they're making money off the increased interest rates, which is going to cause a recession, which makes their leaders fearful of a recession because the interest rates are being increased so quickly. Jamie Dimon, the head and CEO of JP Morgan, indicated that he thought we were going to face something like a hurricane of a economic recession. So while it's advantageous now, in the future, when people stop borrowing money, when repossessions increase, people default on their mortgages, people's cars get repoed, this is going to fall apart, and we're going to have a severe recession, according to Jamie Dimon. The airlines and air travel may be recovering, as United Airlines reported the best earnings they had seen in 3 years. I think part of this is because there's less health concerns now, and people are traveling more. And part of it is people haven't traveled that much the previous 2 years because of the health concerns. And while that's still somewhat of a concern, it's less of a concern than it was before. So we expect airlines probably will start to do better, but this is very tenuous, as their jet fuel prices are possibly and probably going to go up as the price of jet fuel increases. Tesla's earnings slightly beat expectations, but their revenue missed. So They continued to talk about having delays and supply chain problems, and all automakers have been having trouble getting semiconductors. So there's these supply chain problems, and a lot of it has to do with China's lockdowns. China's continuing their policy of being very severe about keeping their lockdowns going because they don't have effective measures to counteract the health problems going around. Tesla has been having some problems ramping up production in their gigafactories in Berlin, Germany, and in Austin, Texas. Also, their 4680 battery, that is being ramped up slower than what Tesla had hoped for. The 4680 battery is supposed to be a big improvement, so that's disappointing. And Tesla is having a difficult time in many ways. For example, is the Cybertruck ever going to be released? I mean, it's been delayed and delayed. The company really doesn't even say when it's going to be released anymore. The last prediction I've heard from Elon Musk is that maybe in mid 2023 it could be started to be produced. But that's starting to produce it, and then that's got to be ramped up. So it's going to be a while before we see a Cybertruck. It makes a person wonder, what is he doing with it? Is he trying to perfect it so it can operate on Mars? Who knows? Elon Musk usually overestimates hugely how fast things can be done. With every statement that he gives where he's predicting how much time something is going to take, he should add the phrase, if everything goes perfectly well and we have no problems, and then it will come out then. He should add that to each prediction like that. And I think Elon overestimated how fast, of course, autonomous driving would be implemented. It's you're taking one of the most difficult things. You're actually trying to get a machine to perceive like a human, and then integrate it with the actions of the car, and then what other drivers and other things in the environment might do, which I think is just an overwhelming task. And Tesla never ramped up the way Kathy Wood thought that theoretically it could ramp up. Uh, she kept saying that the electric vehicles were going to get cheaper and cheaper. Well, in fact, they've gotten more and more expensive. The only place that has a cheap electric car that's in like the $25,000 to $30,000 range, I believe, is BYD in China, and that's because they're making an economy electric car, which Musk really doesn't want to deal with, and which really isn't a competitor with Tesla because it does deal with the economy models. BYD, their symbol is BYDDY. That's their symbol. They are kind of the GM and Tesla combined of China. They make all kinds of cars, and they're very flexible, and they have a good battery that does not explode if you penetrate it, which has been a problem with electric batteries in the past, but it's no longer a problem. BYD is very innovative, and they're very good, and they're selling more cars in China now than Tesla is. The United States needs a good economical electric car, and that's why Tesla isn't really a competitor with BYD, because BYD is providing the economical car in China, and so it doesn't really directly compete with Tesla's upper scale and luxury cars. Teslas, for the most part, are simply too expensive for many people, and they're too expensive for too many people. And we need an economy model in this country. But it's unlikely that Tesla will endeavor to do that simply because Musk has so much on his plate with the Cybertruck, and now they're doing the semi. They have an electric semi that's going to be delivered to Pepsi in December, according to Musk. But don't hold your breath. If everything goes well and there are no problems, it might occur in December. But that's a major accomplishment, and that's kind of happened in the background. Uh, and also Tesla, they're working on these robots, and that's something for the future, just like autonomous driving is something for the future. Uh, Autonomous driving, I think, will probably need something more than the physical equipment they have now on it. Some have suggested it needs forward-looking infrared, which is FLIR, FLIR, forward-looking infrared. And this is what guided missiles use to change their flight in target. What the change As the target moves, the missile can move towards the target and change its course. And it's because of the forward-looking infrared that allows them to do this, which is going to be complicated. But I think ultimately they might have to get it down to where it's scalable and something that will fit the car and be more adapted to the car before autonomous driving gets perfected, which I think is going to take a couple years. I haven't noticed that much of an increase in my Tesla's ability to navigate through traffic. It's improved, but it isn't like it's taken my breath away yet. So we will see. But when it first came out that he was working on this, we were going to have autonomous taxis. And I think that's been a big disappointment. And some people were basing their projections on autonomous taxis. I think we are a long ways from that. You would, however, be in good company owning stock in BYD. Warren Buffett owns 19% of the company's stock, and he's owned it for many years. And I don't believe he owns, this is the only Chinese company that I've heard of him directly owning. He may own more, but this is the only one I've heard of. In many ways, I think the market was unrealistic, expecting Tesla to lift the entire stock market. We already had some warning that their deliveries had not kept up with the amount of cars that they were producing, and it was blamed on supply chain problems and things like not getting the minerals and things that they needed, and the travel to the correct location problems, all that sort of thing, the hassles, I will call it. So we got mixed results from Tesla, and boy, did the market take it hard. In the after hours, Tesla went down 14 points, and it's down to 208 as it approaches the 200 mark again. So it looks like the stock market crash is probably ongoing. Uh, November 2nd is going to be a big date. Also, October 27th will be a big date. October 27th, the gross domestic product comes out, and we're going to see how bad of a recession we either are in or are going in. And then on November 2nd, we get probably a 0.75 increase in the interest rate, which will take it from 3.25 to 4%, which is the highest it's been in years. And so we could have a 1-2 punch where we have a decrease in gross domestic product, which will confirm the recession, and then we have an increase in the interest rate, which makes the likelihood of a recession greater. You know, some people are looking for the Fed to pivot. The Federal Reserve has shown no sign that it's going to pivot. And the only way it would pivot is if there was a financial emergency, illiquidity, something like that in the stock market, which basically the Federal Reserve would step in to prevent disaster. Okay, if the Fed jumps in and lowers interest rates because an accident or a disaster has occurred, what do you think that's going to do to stock prices? It's not going to be positive. It never has been positive to begin with. It eventually will pull it out after the disaster subsides, but immediately the stock market's going to go down more. So be careful what you hope for. A pivot, as far as the Federal Reserve is concerned, is only going to happen if disaster occurs. And do you really want a disaster? The interest rate on the 10-year bond keeps going up, which is bad for stocks, especially technology stocks and innovation stocks, which typically have to borrow more money until they get established. But a good barometer of that is the interest rate on the 10-year bond. And also the strong dollar. You know, we have it bad with inflation in this country, but around the world, it's mostly a lot worse. And that's because so many things are based on the dollar. And as our dollar gets stronger, things that we export to other countries gets more expensive for these other countries. And so eventually it will help with our inflation simply because it's cheaper for us to buy goods from other countries because the dollar is so strong. But it leads to a recession in a way because we will export less. And companies like Apple that export a lot of their product to other countries, they're finding that demand is being destroyed as far as internationally goes. There are many negative things going on, which makes a recession look more and more likely. Auto lots are starting to fill up with repossessed cars. Mortgage rates keep increasing, and the value of houses has been going down lately. The VIX, which is a measure of volatility, which goes up in bear markets, is still over 30. And usually when you have a VIX above 25, that indicates we're in a bear market. So we're still solidly in a bear market. There's some very direct signs that we could be in for rough sledding as far as the economy goes. Apple is reducing production of its iPhone 14 Plus, iPhone 14 Plus. This isn't the expensive model. It's has less features and is more economical. So I'm kind of torn on that one. I think part of it might be that we keep our phones for a number of years now. They seem to last longer. And I think people might want the extra features of the iPhone 14 Pro. But it could be due to demand destruction that they're seeing that people with less money, that would be the people that would buy the iPhone 14 Plus, that they're not able to buy this phone given the current economic conditions and inflation. So they're keeping their phones longer, probably. There's other signs like companies are starting to lay off employees. Companies like Microsoft, planning to lay off 1,000 workers. This is not a good sign that the demand is being undisturbed by the current inflation. Meta, which was Facebook in a previous life, uh, they're going to be affected, especially by a recession as far as their metaverse plans go. Their metaverse equipment, their Oculus, their new version of it, costs $1,500. How well is that going to sell if we continue to be on course to going into a recession? I don't think it's going to do very well, and Meta's probably going to continue to have to either restrict their hiring or maybe even laying off people. So when is this all likely to end? When will things start to get better? When will the Fed intervene? Uh, and I'm not talking about there being an accident. I'm talking about inflation coming down to where the Fed can be more dovish, more likely to ease off the interest rates. I think what's going to happen is you want to watch the 10-year interest rate on bonds. And I think that's going to come down as they keep raising the interest rate. So it's going to be a process of the Fed increasing the interest rate, which makes inflation come down. And at some point, they're going to crisscross. And at the point where they crisscross, that's when we start having hope that the stock market can go up again, because it will mean that the interest rates are actually having an effect on inflation. And there's just minimum evidence of that so far, but we need to see that crisscross where the Fed has raised the interest rates enough that inflation starts to come down, and one goes up, that's the interest rate, the other comes down, that's inflation, and they crisscross, and X marks to the spot where it might be time to start doing long-term investing again, which has been impossible in this bear market. And I've tried and tried, but I keep returning to my triple leverage inverse funds, which now are SQQQ. That's the triple leverage inverse fund on the 100 largest companies on the NASDAQ, which has done really well for me. There's DRV, which is the triple leverage inverse fund on real estate. And there's Yang, YANG, which is the triple leverage inverse fund on Chinese companies that trade on American stock exchanges. Let's look how these triple leverage inverse stocks have performed year to date. The triple leverage inverse fund on the 100 largest companies on the NASDAQ, SQQQ, I always put too many Q's, SQQQ, has performed probably the best for me. And at times I leave it on for several days, maybe a week or two at the most, because you get these weird bear market rallies that can just rip your face off, especially in a triple leveraged fund. But I've gotten so I know this fund and how it moves well enough that I've often been able to make money on days that the market has gone up. And so SQQQ should have done worse. And I actually came out okay and even made money sometimes. So it's been outstanding. It's doubled since the beginning of the year, 99%. It's doubled as of the date that I'm recording this. So it's been very much a winner. A more recent and dramatic result has been DRV, which is the triple leverage inverse fund on the real estate index. And year to date, it's gone up 123%. It's way more than doubled. Wow. So real estate does go down, certainly, as mortgage rates increase to around 7%. And the third triple leverage inverse fund that I'm investing in is Yang. And this is something I've been ambivalent about, and I've kind of been in and out of it. And I'm back in it simply because China looks like it's in such bad shape. It's in way worse shape than the United States is. We have a way out of the mess. I think China's going to be in the mess for a longer period of time. What they're going through seems more similar to the 2008 crash than what we're in right now, as our real estate is in relatively good shape, while their real estate is in very bad shape. And there's going to be a lot of financial instability because of it. It's made close to 40% year to date, but it has its spikes, as you can see from the chart. So I think it's a little more risky. I'm a little bit ambivalent about it. I'm going to play it out and see how it goes for a while. But I suspect I'll be in and out of it, and we'll make money here and there, which has been the case so far. Be sure to smash the like button if any of this has been helpful to you at all. And be sure to subscribe if you haven't done that already. Hit the notification bell if you want to be sure not to miss any videos. And I'll keep trying to bring you the world of inverse investing, which is the only thing that has really worked for me this year. I've tried to build long-term portfolios, and it's just not working, and I don't think it's going to work for a while. And the statistics on the stock market will bear me out on that. Thank you very much.